Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today, we're going to be looking at what retirement could look like if you have $0 saved as of today. We'll look at the S&P 500, Apple, Microsoft, Dow Jones, Realty Income, and then JEPQ. So what we need to establish is what is the return since inception for that stock, because that is going to be our baseline going forward. That means what has this stock historically returned every year ever since it was created. So the S&P 500, let's go ahead and take this one nice and slow. Before we jump in, we have the age over here. If you're 18, you've got a significant advantage. 25, 35, 40, 45, 50, 55, 60, etc. And we have the year here as well. So if you're, 33, just look at the year here and then do the math. Okay, in 10 years, 2034, I'll be 43. So you got it. Okay, so let's say you are, well, first let's establish these numbers really quick. So the S&P 500 has returned 10.17% per year. So 10.17. Okay. Apple return since inception is 18.87. Microsoft since inception is 26%. Dow Jones return since inception 8.7%. Ticker symbol O, which is Realty Income, that is 13.9%. And JEPQ we'll do at the very last because that one also pays a significant dividend. So we know for our annual share growth, we'll look at the S&P 500 first. We'll do 10.17. What we need to get is the S&P 500's dividend as well. We'll do this for all of the companies. So let's say you're 18, 25, 35, 40, 45, 50, 55, 60. You want to invest in the S&P 500 because it has the top 500 stocks. It's safe, yada, yada. So that the S&P 500 does pay a 1.29% dividend. So we're just going to put 1.29% here. All right. So your starting principal. Let's say you start out with $2,500. And you're going to put $2,500 in every year. And let's see what that looks like. As an 18-year-old, you would hit six figures when you are 33. That's pretty good. 25, you will hit six figures 14 years later. So 15 years later, I'm sorry. So 40 at the age of 40 and so on and so on. So you can see that being 18, you'll basically have seven figures by the time you are 53 years old if you start investing today. If you start investing today, you're 25 and you put 2,500 in today, the S&P 500, and you put 2,500 away each year. It looks like you'll hit seven figures when you're 60. And then we have 70, 75, 80, 85, 90, 95. If you're 60 years old and you start today and you continue to put in every year 2,500, at the age of 90, you will have hit seven figures based off of historical data. Let's say we're being a little bit more aggressive here. We start out with 10,000 and we put in, let's keep 2,500. Let's keep it 2,500. So again, and starting out from 10,000, seven figures at the age of 50, when you start at 18, 92, if you're the age of 60, you could get seven figures. So pretty interesting stuff. And again, you can be more aggressive. You could do 25,000 because you just got inheritance or you've got you won some type of lottery, and you put $5,000 in every year. Again, $5,000 every year. Let's see what that looks like. $5,000 divided by 12 months. $416 a month divided by 4 weeks. That's $104 a week. So again, let's see. At $1 million, if you start at 18, it looks like 44 years old, you could have $1.1 million. If you start at 60, at the age of 86, you could have 7 figures, considering that the market does what it's supposed to do. It's pretty incredible. So that's what the S&P 500 looks like. Let's now look at what Apple looks like. 18.87% return. And just to make sure we're looking at it right there. And then Apple, I don't know if Apple has a dividend, but we're going to find out. I don't think it does. AAPL? No, it does. I think it has a very small dividend. It does. 0.5. Let's do 0.56. Okay, the same thing. You have $25,000. You're 18. You looks like 7 figures could be as possible as the age of 35. So that's 17 years. And if you're 60, again, starting out with 25,000, putting away 5,000 every year on top of that, 7 figures. As long as Apple continues to stay around. Pretty cool stuff. And if we just shrink this down to starting out with 10,000 and then putting 5,000 in, again, that $15,000 gap from 25,000 down to 10,000. Yeah, that $15,000 gap, it pushes instead of being at 7 figures in 17 years, it's now 19 years. So just considering an extra 15,000 to shave off 2 years, okay, and then let's look at Microsoft. That's a 26% return. And I don't think they offer a dividend, but I could be wrong. Let's see. They do. Let's call it 0.68. All right. Again, with $10,000 starting out today, you're 60 years old. You could be looking at 7 figures by the time you are 76. Very cool. Very cool. 18, if you do 10,000 today and you do 5,000 every year, dividends reinvested, at the age of 58, $368 million. That's insane. Absolutely insane. Okay. Very cool. So I guess we don't really need to go on to Dow or O. So at that point, that 7-figure threshold or whatever your number is, think about what it's going to be different for every person. So, and you have to also think about if you want to do this, I would suggest, I can't. I am doing a similar strategy in my Roth IRA because at my Roth IRA, I get to take my investments out tax-free at the age of 59 and a half. So yeah, look into a Roth IRA if this looks good to you, or not this, but like this principle looks good to you, because you don't take any money out. You have to wait till retirement. You do get taxed and penalties if you do take it out early. So just a heads up. But when you do find your magic number, what I plan on doing is put that lump sum. Don't close out the account. You're going to trade it out of your Microsoft, trade it out of your Apple, trade it out of whatever ETF index fund you have, and put it into an income producing dividend. So my magic number, let's just say it's $3 million. So I'm 33, and if I follow this strategy, by the time 2044 rolls around, 20 years from now, gosh, that's so long away. Let's just bookmark this. So 3.2 million. So now I've got 3.237 million, and I want to put it into a high dividend paying stock. Something realistic, between 5 and 8%. Putting all of my funds into something like JEPQ right here. JEPQ. JEPQ pays 94%. So again, I'm going to take this $3,237,057, and it pays, what was it, 8.94% times 0.0894. That's $289,000 a year divided by 12, $24,000 a month, tax-free, because it's in my Roth IRA. Pretty powerful stuff. And you can, if you're over a certain age, I think 50, you can contribute more to your Roth IRA. So this is a pretty extremely powerful compounding method. Putting it into a growth, S&P 500, Microsoft, Apple, maybe a mix of all three. Throw some Salesforce in there, throw some Intel stock, throw some Mercado Libre, some healthcare companies, whatever high growth healthcare or high growth stocks look good to you. So my magic number, it's not really my magic number, but 3 million. That's pretty incredible, isn't it? I think it's pretty incredible. So yeah, if you are 60, I'm not saying, I'm saying, start to catch up a little bit so you can retire eventually if you want to, unless you just want to work forever, which is fine. It's personal preference, but that's what this looks like to me. And it's funny because I will be 54 in 2044. And if someone who's at 18 years old, they'll be 38 and they'll have the same amount of money. It comes down to time in the market. Not time in the market, but being in the market for so long. So by the time I'm 54, I'll have 3.2. If you start at 18 and you go 54, you can have $140 million, which is crazy. So again, I think this calculator is in my description area, or you can also use another website that does compounding growth calculators and see if you get the same results, because this is built off of that. So if you made it this far, thank you so much for watching. It's never too late to add to retirements. I love the Roth IRA for the tax purposes. I do not contribute to my 401k, even though it's free money. I would rather have that money now and put it away into my Roth IRA because I've got a little snowball going, Anyway, thanks for watching. Comment, subscribe, like. Have a great week. Retire sometime. Add to retirement. Bye.